One narrow waterway, just 21 miles wide. And yet, this small stretch of ocean may control the fate of the global economy. Every single day, millions of barrels of oil pass through this narrow passage between Iran and Oman. Tankers carrying the energy that powers the world's cities, factories, and transportation systems quietly move through these waters. But suddenly, something has changed. Tensions in the region have escalated. Shipping companies are growing nervous. Military forces are moving into position. And analysts around the world are asking a dangerous question. What happens if the Strait of Hormuz stops working? Because if that happens, the consequences may not stay in the Middle East. They could spread across the entire world economy. The world's most important waterway. To understand the danger, we first need to understand the location. The Strait of Hormuz sits between the Persian Gulf and the Gulf of Oman. It is the only sea passage that allows oil from some of the world's largest producers to reach global markets. Countries like Saudi Arabia, Iraq, Kuwait, the United Arab Emirates, and Qatar depend heavily on this route. Every day, massive oil tankers pass through this narrow corridor. Together, they transport roughly 1/5 of the world's oil supply. That means nearly 20% of global energy moves through this single choke point. If the strait closes, or even slows down, energy markets could react instantly. Oil prices would surge, shipping insurance costs would skyrocket, and global trade could experience major disruption. But this region has always been fragile, and history shows that it doesn't take much to trigger chaos here. Rising tensions. In recent months, tensions involving Iran have intensified. Military activity in the region has increased. Naval patrols have become more frequent, and reports of incidents involving commercial ships have raised new concerns about security in the area. For global shipping companies, even small threats can create massive consequences, because oil tankers cannot simply take another route. Unlike cargo ships that can sometimes reroute around continents, energy exports from the Persian Gulf rely heavily on this narrow maritime corridor. That's why even the possibility of disruption can send shockwaves through financial markets. Traders begin speculating, investors react, and energy prices start to climb. But the real danger isn't just temporary panic. The real danger lies in what could happen if tensions escalate further. Why this waterway matters so much. Modern civilization depends heavily on energy. Oil fuels transportation. It powers airplanes, trucks, ships, and industries around the world. When energy prices rise sharply, everything becomes more expensive. Food, manufacturing, electricity, transportation. Inflation begins to spread through the global economy, and the Strait of Hormuz plays a critical role in maintaining the stability of that energy system. Think of it like a major artery in the body. As long as the artery stays open, the system functions normally. But if the artery becomes blocked, the entire system begins to fail. That's why economists, energy experts, and political leaders pay such close attention to this region, because even a small disruption here could ripple outward across global markets. The fragile balance. For decades, global powers have worked to keep this route open. International naval forces patrol the area regularly. Their mission is simple: ensure that shipping lanes remain safe, but maintaining stability in the region is not always easy. Political tensions, regional rivalries, and economic pressures constantly threaten the fragile balance. Iran, which sits along the northern side of the strait, has repeatedly warned that it could restrict access if tensions escalate with other nations. While such actions would come with major consequences, the possibility alone is enough to worry global markets. Because closing the Strait of Hormuz would not only hurt Iran's rivals, it would shake the entire world economy. A lesson from history. This isn't the first time the region has faced serious tension. In the past, conflicts in the Middle East have already demonstrated how sensitive global energy markets can be. During the oil crises of the 1970s, political turmoil in the region triggered massive price shocks. Fuel shortages appeared in several countries. Gasoline lines formed at stations. Inflation surged across the global economy. Entire industries felt the pressure. Those events showed how deeply interconnected the global energy system had become. And today, the world is even more dependent on stable oil supplies, which means disruptions could potentially create even greater economic shockwaves. The domino effect. If the Strait of Hormuz were disrupted, the consequences would likely unfold in stages. First would come panic in energy markets. Oil prices could spike dramatically as traders react to the threat of supply shortages. Then, shipping companies would face rising insurance costs. Operating in a conflict zone dramatically increases risk. Some companies might even pause operations temporarily. That alone could slow the movement of energy supplies. Next, governments would begin preparing for potential shortages. Strategic reserves might be released. Emergency energy policies could be activated. Meanwhile, global inflation could begin rising as energy costs push prices higher across multiple industries. And financial markets would likely react as investors try to understand the scale of the risk. What starts as a regional crisis could quickly transform into a global economic problem. Military presence. Because of the importance of this region, several powerful nations maintain military presence nearby. Naval fleets regularly patrol the waters. Their goal is to protect shipping routes and deter potential threats. Warships, surveillance aircraft, and advanced monitoring systems operate throughout the region. But even with this level of security, the risk of incidents remains. The Strait of Hormuz is extremely narrow in places. Ships traveling through it must follow designated lanes. Heavy traffic, combined with geopolitical tension, creates an environment where even small incidents can escalate quickly. That's why analysts constantly watch the situation closely, because stability here is critical to global economic security. Oil markets react. Whenever tensions increase in the region, oil markets respond almost immediately. Prices tend to rise as traders anticipate possible supply disruptions. Even rumors of instability can influence market behavior. Energy companies begin evaluating alternative supply routes. Investors start hedging against price volatility, and governments begin reviewing their emergency plans. The modern financial system reacts incredibly fast to geopolitical risk. In today's connected global economy, news spreads instantly, and markets respond within seconds. That's why the Strait of Hormuz has become one of the most closely watched locations in global energy politics. The global impact. If shipping traffic slowed significantly through the strait, several industries could feel the impact quickly. Airlines would face rising fuel costs. Shipping companies would experience higher operational expenses. Manufacturers could struggle with increased production costs. Even consumers might notice rising prices at gas stations. And when energy becomes expensive, the ripple effects spread through almost every sector of the economy. Transportation becomes costlier. Goods become more expensive to produce. Supply chains experience new pressures. The entire economic system begins absorbing the shock, and that's why the stability of a single waterway can influence the financial well-being of billions of people. A dangerous question. So the question remains, what happens next? Will tensions calm down and stability return to the region, or could the situation escalate further? At the moment, global leaders are watching carefully. Diplomatic efforts continue, military patrols remain active, and energy markets remain on edge. Because the world understands just how important this narrow passage really is. Final thoughts. The Strait of Hormuz may appear small on the map, but its importance cannot be overstated. Every day, the global economy quietly depends on the safe passage of energy through this corridor. And when that stability is threatened, the risks extend far beyond the Middle East. They reach financial markets, energy supplies, and the economic systems that power the modern world. For now, the ships are still moving, the oil is still flowing, but the tension remains. And the world continues watching closely, because sometimes the fate of the global economy can depend on a place barely visible on a map.